on everyone. Dlamini here, back here with another video. So today on this session we're going to be doing a midweek connection. So we're just going to be doing an update on what has been happening on the market for the past 2 days, and like what might happen in the next coming days as to the week is going on. So there's really not much of economic data that is coming out this week, but the story that is actually looming this week, it's the Russia and Ukraine tension that is there, that is looming. So if it ever happens that Russia finally invades Ukraine, so there might be some energy crisis there in Europe, because most of Europe's energy comes from Russia. So we are seeing that if Russia really invades the Ukraine, it really invades the Ukraine, so the European Union will impose sanctions on Russia, as well as the US will also impose sanctions on Russia. So we will have some major energy problems in Europe, not just in Europe as well, maybe let's just say around the world globally. So we have seen WTI moving higher the past couple of days, the past couple of weeks rather. But what has been happening, like since the week started, WTI has been like in a correction phase, moving lower. So what I'm just seeing is that it's just taking a breather. So the markets will actually maybe try to move higher, even more higher, concerning the news that are actually happening with Russia trying to invade Ukraine. So the bullish stance here on WTI crude or US oil, it is still bullish. It is still bullish. So WTI stands for West Texas oil. So it is the oil that is coming from the United States, but we measure oil in different parts of the world, but it doesn't matter which one you are using, because if one oil index is going higher, eventually the other one also goes higher. And as well, Russia is part of the OPEC countries, so you should know that if anything happens with oil, the OPEC is also going to be affected as well. So if we are moving to the crypto space, then we've seen that in the past 24 hours, Bitcoin is down about 2.7%. It tried to move higher past the 45,000 level, but it got rejected there at 45,500, if I'm not mistaken, and then it started moving lower. So now it's down about 2.67%, and for the past 7 days it is up about 13%, which is just pretty impressive there. But if we're looking at the longs and shorts there on Bitcoin, of what might actually be happening there, the longs and shorts, we might actually be seeing that most, okay, let me just change this to a daily, so because this is a 5 minute. So in the past 24 hours, there is still a balance there, guys, between buyers and sellers. There's still a balance in most major exchanges there. So if we're seeing that if you are a day trader, this tool is very much useful, because if you are seeing that there is a balance of buyers and sellers between the exchanges, you might actually compare this data using your charts. you might actually compare this data and use your charts there as well to make up an analysis when it comes to Bitcoin. So if we are comparing that and we are looking at the Bitcoin chart, as in like now, we are actually seeing that the market actually did went higher there on Bitcoin on the daily charts. But okay, let us move to the daily. But what actually happened, that the market actually got rejected there at the 45,000 level. As I said earlier on, it get rejected there at the 45,000 level, 45,500, somewhere between there. So the story here, what might actually happen from now, is that there's just two tails now of this coin. There's just gonna be two tails of this coin. Scenario number one is that since we most people are anticipating a recovery here on Bitcoin, perhaps something like this might happen. Why? There's this FCR hanging right here, ne? And here there is a left shoulder, and then this might be the head of the reverse head and shoulder. So Bitcoin might actually maybe try to come down to this level here. When it comes to this level, and then perhaps the price of Bitcoin might actually try to rebound from there. So from that level, the price might actually maybe try to rebound from there, moving a bit higher. So it's just that is just scenario number one there for Bitcoin, ne? But if we are if I continue with my bearish stance there, the bearish analysis that I had with Bitcoin, what might actually happen here is that I could just remove everything here. What might actually happen here, price could just be rejected at this very same level that is at trading at, and then resumes the original downtrend that I was bearish on. So that scenario again, the bearish scenario, it's still at play, as well as the bullish scenario there is also still at play, pending whether buyers are going to outperform the sellers, or sellers will eventually surpass the buyers. So if this level becomes a rejection, Bitcoin will eventually move lower, below 30,000, 29K, the level I spoke about on previous videos. And if it can move even lower to 17,200. So if we are looking at the dollar index, DXY, sometimes our internet connection is very disappointing here in South Africa. So guys, you should bear with us, you should bear with me. Sometimes charts take time to load, so that's why sometimes I use two devices when I'm doing charting, or if I have trades open. So the dollar index, it's still trading at this zone, the 95 60 level there. So if it happens, it breaks below 95.06, perhaps it might go lower to 94.23, even as low as the 93.50 level. But I'm still much bullish on the US dollar, that it might actually still go higher to the 98 level, even the $100 mark. So if we are looking at the SPX, so there on the S&P, now we've seen some major moves there on the US stock markets, that the market has rebounded and recovered some of the gains that it has lost over the couple of weeks since the year started. So if we are looking at the index itself, that it did bounce off the 4270 level here and went up to the 45 the 4530 the 4530 level, if I can just be precise about it, the 4530 level. So also here on the S&P, there is also two scenarios that we might actually see here, ne? So scenario number one, perhaps the worst is already over on the S&P. We might see price actually moving higher from here, and then the S&P might form a V-shaped recovery from here, which I sometimes call the V play, because of this is the first bottom, and then this is the second bottom, and now there's a V shape that is here. So the market just did a little pullback. Maybe it is going to resume its original uptrend, moving higher, pending that the US economy it is robust, because the data that came out on Friday, the NFP number came out ahead of what investors were anticipating. It came out ahead. It was actually one of the greatest numbers that the US government once printed on the NFP. So as much as there is some problems with Facebook losing over 200 billion of its value in a single day, but it looks like the Nasdaq is also trying to recover from that loss that Facebook made, because it actually dragged the whole index. So it's also doing almost the same thing, ne? That we might maybe we might see the market trying to do a V-shaped recovery again here, ne? Trying to do the V-shaped recovery here again. Maybe it might resume its original uptrend, or what might actually happen here, it can just come back to the zone there, to the 15270 zone, and then when it comes back to that zone, it's going to do like a double top there, and then the markets actually goes even lower. Why am I saying this? Because it might be a retest of this double top that we are of this head and shoulder that is right here. This is a big head and shoulder that is right here. As you can see, this is the left shoulder, this is the entire head, and then this is the right shoulder. So it might actually maybe coming to do a retest of this, and then do a double top here, and then the market goes down. So I've given you two scenarios there on the S&P, that it might actually go higher, and then scenario number two, it's here on the Nasdaq, that it might go higher, or it might even go lower, pending that the US dollar it is going to be weaker. Maybe stocks are going to recover. If the US dollar continues its strength, perhaps stocks might actually fall. So looking at USDZAR. So USDZAR is still in a tight range there. It's still in a very very tight range there. So why am I saying it's still in a tight range? It's still trading inside this bullish flag that is here. So as we posted on the previous video, that is still trading at this inside that bullish flag that is here. So if we see the dollar strengthening, eventually 1588 is on the cards. Now if the dollar weakens, we might go lower on USDZAR, the below 1500, below the 15 rand level to 1490, even as low as the 1450 level or 1448. So there's as well, those are two scenarios there, but they will be pending. That's how the dollar will be behaving. So if we look at some few things that on the JSE. So on the JSE, let us look at Standard Bank and SIBANYE. Standard Bank is SBK. So Standard Bank, since we are in a bit of a rate cycle there, so we are seeing that banks are trying to move higher, and Standard Bank is one of those banks that are trying to move higher. So it broke out of this range that it was here, and now it's actually trading outside of this range. So we might actually see price of Standard Bank passing 160 and 173, even as high as 18 sorry, the 187 level. So the last one that you need to check out is SIBANYE, which is SSW. So SIBANYE right there, we are seeing that it broke out this trend line, and now it is trading above this zone, which was the pullback level here. So we might actually see SIBANYE moving higher above the 60 rand level, even as high as 67, going to 79 rand, and might actually hit 90 bucks a share. There's the SIBANYE. So that is pretty much our midweek analysis there. So guys, Kelly stocks it's 550, the Gentleman's Club is 550, and then if you want both my signals, forex and stocks, you're gonna pay us 850. These prices are gonna go higher because inflation is also hitting us hard, so we're also going to increase us. So guys, give us a shout out, subscribe, like our page, share, and criticize whatever you guys do. It also grows our brand, and it also gives us motivation to do better. Yes, so remember, these videos are mainly for educational purposes, not investment or trading advice. So people are reliable for a portion or entire loss of their matching deposit. So it's important not to trade money that you need to pay the rent next week. Do not trade money that you have to pay your car or your children's school fees. So do not trade money you cannot afford to lose. So guys, that's pretty much about it for this session. I'll definitely see you guys on the next video. So take it easy and God bless.